It's so great to have you because we've been talking so much about startup valuations right now and what's going on in private tech. What do you think about valuations?
Yeah, thanks,
Are
Emily.
they sustainable?
It's great to be here. There's been a lot of conversation about sort of the high valuations, in particular in the late stage venture capital financing market. But if anything, I'm here to say that venture capital is underinvested relative to the opportunities we're seeing. And quite frankly, undervalued as an asset class. So what's most exciting now and what's driving a lot of the high expectations for the unicorn companies is sort of the enormity of the markets that we're investing behind. And as an industry, we've never invested in markets this large. So fundamental changes at the horizontal computing level, obviously mobile, cloud computing, but things like wearables, things like drone platforms. These are very large horizontal, I would say just vast markets. But at the same time that you're having this just wide open playing field, you're also, you have what we would refer to as very deep verticals. What Uber has done to transportation, what Airbnb has done to hospitality. We're seeing that across enormous markets, including education, healthcare services, obviously fitness and wellness with our Fitbit investment.
But there are, look, over 100 unicorns valued at over $1 billion. I mean, look, is that fair? A lot of these companies, some people say, are raising money on an idea that they haven't even executed on.
Couple perspectives. For sure, there will be disappointments in the unicorn set. Valuation is a combination of sort of these high expectations, but then also financial performance. And not all of the unicorns will have the financial performance necessary to exceed their private valuation. That's okay. Venture capital is actually a very small industry, roughly $50 billion a year invested in 2,000 to 3,000 companies. The world economy needs venture capital to take these kinds of risks and to try and build companies. And the reason is simple. We don't just build great companies. We, as a venture capital industry, we build industries, entire industries. We build jobs, and we, really, quite frankly, build the future. And so the industry, as a whole, unicorns are a teeny percentage of what's happening in venture capital. And quite frankly, they're clustered around a few markets, predominantly consumer tech and in some cases SaaS.
So you were in the thick of the last bubble. What makes today different? Or would you say no bubble right now?
I don't think we're in a bubble right now. Absolutely not. I think we're in a prolonged boom. And along the way of that boom, there will be highs and lows for certain companies in certain segments. The difference is in the word fundamental. Like when companies work now, they work extremely well. So the financial performance of an Uber, or in our case of a Fitbit, which is now public, or even some of the smaller private companies that we work with, when it works insanely well from both a growth and margin standpoint. It didn't work that way in the last bubble.
So let's take a look at Fitbit then, for example. What do you make of, so first of all, people wearing these instead, an Apple Watch, and companies like Jawbone, which have raised and are clearly struggling in the wearables space. I mean, my experience is that many people buy these things and then stop wearing them.
So I'm an athlete. I love my Fitbit Surge. It's fantastic. And I think wearables is just yet another example of an enormously large horizontal market. Just to give you some sense of scale, we have some fun with the Fitbit numbers, right? And this is all, as of March, this was announced. Fitbit users, as of March of this year, have taken 13 trillion steps, 11 trips to Jupiter. Okay, we haven't ever, this is a great example of the vastness of these markets. We've never invested behind the types of scale that our startups are experiencing.
And quickly, I know you're big on drones.
Yeah.
Why?
True was the first investor in Fitbit in 2008. We're also the first investor in the commercial drone industry here in the U.S., 3D Robotics, many years ago. They're based in Berkeley. We think, again, a great example of not only a huge horizontal market shift, basically bringing computing to all kinds of places in agriculture, in industrial applications, search and rescue, all kinds of really interesting things. But again, think about every one of those markets, deep vertical. Data collection, sensor collection. Company is growing like crazy. We're something like 5x over our revenue plan for the year. It's a very, very exciting time overall.